Altman. And hi, everyone. It's great to see you all here today. I'm Robert Blvd. And before we jump in, I just want to do a quick personal check-in. Like many of you, I'm navigating the daily flood of political news, and I found that staying focused, positive, and grounded in what we can control is key. Function forward, control what you can. That brings me to our business philosophy and the values we hold as your fiduciary. Our commitment is to help you make sound, objective decisions, especially during times of emotional stress or uncertainty. At the heart of what we do is what I like to call good karma. We believe in advocacy, compassion, inclusivity, accountability, and loyalty. These principles guide every conversation and every recommendation we make for you. And on that note, I'm excited to share that our book, Take Pride in Your Money, is now available wherever books are sold online, along with our online course launching throughout July. It's written from the LGBTQ perspective, and there is content that anyone could benefit from. Thank you all for being here. And David Treece, let's get started.
Thanks everyone for joining, and another Treece Talk. The timing on this one is really good, I think, because of the mid-year and looking back the first 6 months, and then also looking forward, some projections, and of course the big beautiful bill. I have lots of comments on that, but let's get started. And also feel free to share any comments or ask any questions in the chat, and we'll get to those as well. As usual, I have lots of opinions. Cetera Investment Management has put out, it's available to the public, to all of our clients and followers, a mid-year outlook. And I have to say that really the theme is still uncertainty. And again, it has to do with politics, policies, the tariffs, which there's this talk of the taco trade that Trump always chickens out, and that these tariffs just get kicked down the road, and the deadline keeps approaching. And now we have one, and he's announced certain tariffs in certain countries, and others are still more postponed. But that is the theme right now is uncertainty. So Cetera Investment, we enter the second half of 2025. Investors are navigating a market environment shaped by both uncertainty and opportunity. Well, the uncertainty is clearly the theme, where we had, they say, some optimism at the beginning. The markets were looking for deregulation, tax cuts, things that were very stimulatory. And now it's shifted to less optimism and more maybe cautious optimism. So, and another thing that we're seeing is a shift in leadership, according to Cetera Investments. We are seeing a shift in leadership. International equities have outperformed U.S. markets year to date, supported by fiscal stimulus in Europe. And there's no question about that. For the first time in a while, we've seen international markets really outperform. We've had really mixed data. The unemployment has gone down slightly, 4.1% from 4.2%. And here is kind of summing it up. Economic risks have been increasing, with tariffs emerging as the primary concern after the tariff announcement on April 2nd, which triggered a further market sell-off, so-called Liberation Day. Remember that? And so the markets tanked. The markets were down 20%. Though some tariffs have been delayed, they have increased certainty. They have increased uncertainty affecting business and Fed decisions. That's another theme here, is that as long as there is this uncertainty, we will not have any Fed rate cuts. And I said this back in November of last year, that all of these policies, the tariffs, the tax cuts, are inflationary. And until we get inflation under control, the Fed is not going to go ahead and cut rates. Their market was pricing in 4 rate cuts. And I said, you're going to get 0. Well, it has been 0. And right now, the market is pricing in like a 0% chance for this month, maybe something in September. They're pricing in 2 rate cuts, but there is going to have to be more certainty before the Fed does that. And these tariffs just create all this uncertainty. So I think the conventional wisdom is that the Fed is doing the right thing. that until we know where we are, you're not going to do rate cuts and stimulate the economy and possibly reignite inflation. So that's kind of the bottom line here. Soft data shows declining confidence and rising inflation fears, while hard data like spending and employment are slowing but still healthy. So that's another key point, is that there's a difference between what we're really seeing in the data and what the expectations are. That is the consumer optimism or lack thereof. So that doesn't quite provide any clarity. That's, I guess, the bottom line there is we are still dealing with uncertainty, and most of it is policy driven. So here again, the ultimate bottom line, look from Cetera Investments, looking ahead, the economic trajectory will hinge on how key uncertainties unfold. It's like people want some direction and there isn't any. Particularly tariff negotiations, Federal Reserve policy, and the labor market. If inflation remains relatively under control, then the Fed will shift to its second goal of maintaining employment levels. And if the market starts weakening, the employment market, and inflation is under check, then you could see rate cuts for that reason to support the labor market. If trade tensions ease through successful negotiations, that's a big if. It may pave the way for improved trade terms and allow the Fed to cut interest rates, supporting economic growth. Inflation remains relatively contained, but consumers still feel the effects of elevated prices, and tariffs could pressure goods inflation in the months ahead. So that's really the bottom line here. It's like more uncertainty, a lack of clarity on where we are. There's no question the market does not like the tariffs. The tariffs are inflationary, and the stock market has responded badly, and the bond market has responded badly. So there's this idea of, if Trump does these things and the markets respond badly, he will once again chicken out, which might not be a bad thing. I'm going to shift gears here and get to the big, beautiful bill. And I have lots of comments on this. This is from RWA Wealth Partners, from the chief economist, Michelle Knight, who this is just a very perfunctory summation of the bill, the big, beautiful bill, that this passed by the narrowest of margins, 51 to 50, with J.D. Vance, the vice president, casting the tie-breaking vote. And then it passed in the House with no Democratic support and even a couple Republicans against it. So there are a lot of provisions in here, including major tax cuts, the tax breaks for tips, overtime work. There is also huge spending, including for immigration, border control, the border wall, 100,000 migrant detention facility beds, and more money for the Pentagon. And of course, this huge cuts in Medicaid. And again, sometimes people mix up Medicaid and Medicare. Medicare is for people who've paid into the Social Security system for 10 years, turn 65, and are eligible. And Medicaid is public assistance for very low income people. And when we say low income, we're saying you basically have to have $2,000 in assets and low regular income. So it is a pretty desperate situation. So that's Medicaid. Another key thing, this is what I want to highlight from this report, is according to the Congressional Budget Office, which is nonpartisan and highly credible still, the Senate bill will add more than $3 trillion to the deficit over the next 10 years. The bill also increases, and this is what was approved, the bill also increases the debt ceiling by $5 trillion, likely extending our country's ability to borrow until 2028 without additional lawmaker approval. Now, we always had this game of chicken where we got a budget to pass, and we have this debt ceiling rather to raise, because we're hitting the debt ceiling, and they have to take extraordinary measures, that the Treasury Department, to keep things going so that we don't default on our debt, bills that are already owed. And you typically had Republicans, when you had a Democratic president, saying we're not going to raise the debt ceiling. We've got to cut spending. And we get this game of chicken. And at the last minute, they reach some deal, even if it's just kicking the can down the road. So here, they have done it themselves. They have kicked the can down the road by increasing the debt ceiling $5 trillion through 2028. So without additional lawmaker approval. So here in this economic report, while this increase avoids the political brinkmanship on this topic that has roiled markets in recent years, it is a stunning reversal of the typical Republican agenda promoting fiscal accountability. This, again, is from RWA Wealth Partners, chief economist. This is not anything I would consider politically biased, and you always look for that. We all have our biases. Lord knows I do. So as many of you who follow me know, but just to point this out, the level of hypocrisy here is really through the roof. And this is also why Elon Musk kind of turned on Trump. The big beautiful bill is definitely high spending, and it's certainly, I think, potentially very inflationary. One thing that is I'm going to really harp on here is there's confusion created. Many of us received an email from the Social Security Administration, straight from the horse's mouth. And I have it here. I printed it out. And I received right away an inquiry from one of our clients about, oh, we signed up for Social Security and we're withholding taxes. Should we stop doing that? I said, no, you should not stop doing that. And I'm going to make some really strong comments here. That the Social Security Administration sent out this false announcement. And I'm going to quote here. The new law includes a provision that eliminates federal taxes on Social Security benefits for most beneficiaries. This is a lie. It is a lie. Providing relief to individuals and couples. Here it gets worse. Additionally, focus on it additionally, it provides an enhanced deduction for taxpayers aged 65 and older. There is only this enhanced deduction. It's not additional. The reason that they did this was part of a campaign pledge to say that we are going to get rid of taxation on Social Security. Now, the validity of that is one thing. When Social Security was created by FDR, it was never intended to be taxed. Taxation started back in 1983. So you could argue Social Security shouldn't be taxed. That's fine. That's one argument. However, we cannot argue that this bill eliminated the taxation on Social Security. It did not. And here I'm going to quote from, this is NBC News, and I'm going to harp on the tone of the reporting. Here, this is by Scott Wong, NBC News. The Social Security Administration, and this is the opening. The Social Security Administration has sent a misleading email to beneficiaries stating that President Donald Trump's sweeping tax cuts and spending law eliminates taxes on Social Security benefits for most recipients. So here I like the fact that they sent out a misleading email. Even that's being kind. It's often there's like, oh, sent out an email of questionable validity, or sent out an email stating something without evidence. That just always seem to couch this. Here, the article continues, but it does not eliminate federal taxes on Social Security. Budget reconciliation, the arcane process Senate Republicans used to pass the bill while avoiding a Democratic filibuster, does not allow changes to be made to Social Security. So there are no changes to Social Security taxation. And I'm going to give you a specific example here, what it does do. The Trump package does, however, include a temporary 2-year tax deduction of up to $6,000 for seniors ages 65 and older, $12,000 for married seniors. Trump, who promised during the 2024 campaign that he would kill taxes on Social Security, has been repeating the false claim the legislation does just that. This is NBC News. This is not, it's like a Democratic lawmaker. Trump made the claim at a rally in Iowa on Thursday night and at Friday's bill signing ceremony. Here's another key reporting point I want to make about this. Former Social Security Administration officials and congressional Democrats said they were appalled by what they viewed as highly political email being sent to Americans by a federal agency. And I certainly agree with that. Quote, this email went to every Social Security subscriber, and every word of it is a lie. Social Security benefits are still taxed. This big ugly bill doesn't change that, New Jersey Rep. Frank Pallone, the top Democrat on the Energy and Commerce Committee, wrote on X. Quote, it's disturbing to see Trump hijack a public institution to push blatant misinformation. Jeff Nesbitt, a former top Social Security administration official during the Biden administration, said the political emails were highly unusual, slamming them as unbelievable and unconscionable. I was deputy commissioner of the Social Security Administration appointed by President Biden. The agency has never issued such a blatant political statement, Nesbitt, who also served in the George H.W. Bush and George W. Bush and Barack Obama administrations. He said this, I posted on X. The fact that Trump and his minion running SSA has done this is unconscionable. Now, I agree with that. And in fact, I think it should be a crime. And I'll give you a couple examples of what's going on here where I think this is just so abominable. The taxes on Social Security are not eliminated. If you are claiming Social Security, but before 65, which is possible, you've retired, and people ask about this all the time. I can take it at 62, 63, 64. So now this is a benefit. It's not taxed, correct? False. It is still taxed the same as always. What is different is people who are 65 get this exemption. So if you are under 65 and taking Social Security, this does not affect you. Your taxes are not eliminated on Social Security. Similarly, somebody in my shoes, this takes place next year. I am turning 65. So if I'm not taking Social Security, I might be thinking, wow, maybe I should take it because, that's a big benefit. It won't be taxed. So if I take it earlier than I planned, that is false thinking. It is wrong. I will still get this extra exemption just by virtue of being 65, whether I take Social Security or not. So that they have conflated these two things and they have lied about it is misleading. People are going to do the wrong thing. They're going to do something that is not in their best interest because they don't understand this. And keep in mind, this is for 2 years from 2026 to 2028. What happens after that? Will this exemption be extended? Will it disappear? People can make lifetime decisions based on something that is very short term. When I said I think this kind of communication should be a crime, I'm going to give an example of where we face this in our industry, the financial services industry. Generally speaking, unless somebody's really committing a crime like stealing, if something goes wrong, we do something wrong, it's a regulatory violation, and we could face, fines, suspensions of our licenses. There's one big exception at where something is a crime, and that is willful blindness, and we're trained on this. So if we choose willful blindness, it is a crime. We can go to court, we can be charged, we can go to jail. And willful blindness is a situation, let's say somebody comes into my office and, oh, I want to open an account, I'm going to invest $1 million with you. We have all of these regulations, and Lord knows our staff has to deal with this. If you have accounts with us, you've had to deal with it. The paperwork, the signing here, sign here, the best interest disclosure, all of these things, the know your customer rules, the ID that we have to have, all the boxes we have to check. And it's just endless. And it just gets worse and worse and worse. If somebody comes and they give me an ID, and it's like, oh, your ID is from Panama and it's expired. You got another ID? Oh, here is an ID from Cyprus. And oh, it's not expired, but that picture doesn't look like you. And your name is misspelled, but okay, we'll go ahead. We'll open your account $1 million. This is willful blindness. And that this is not legitimate. You don't know your client. You're not following the rules. You could be facilitating blindly illegal financial activity, tax evasion, money laundering, drug money laundering, whatever it might be. I think if you're going to send out false information like this and turn our government into a propaganda machine for political purposes, something that is demonstrably, provably false, there should be a criminal penalty for it. So this is where I don't like some of the language where people just pussyfoot around this. This is absolutely abominable. So just to wrap that up, if there's any question on this, it's a new deduction, $6,000 for individuals, 12,000 for married couples who are 65 years old. It is true that this will eliminate effective taxation on Social Security for a huge number of people, but it is not a direct, it only affects those people in that situation. It has nothing to do directly with Social Security. One last thing I want to say on this, this also hurts this whole big, beautiful bill, the solvency of Social Security, which is already a tricky issue. The deduction will reduce Social Security tax revenue by around $30 billion annually, according to the Committee for a Responsible Federal Budget. This would accelerate the depletion of the OAS, the Old Age and Survivors Income Trust Fund, by roughly 1 year to late 2032. Whenever we hear 30, it sounds so far away, but we're talking 7 years away. And that is in the administration of the following president. So, the next president is going to have a crisis. And, this happened in 1983, and maybe it will be solved, but this is an issue. So there are other ways that you can check out the facts. There's one PolitiFact where they will review this. For example, the One Big Beautiful Bill will deliver the promise of no tax on Social Security. They rate this mostly false. And they go very specifically to say why. But some of the things here, Trump's statement muddies the waters about what he promised and what the bill delivers. It doesn't muddy the water. I mean, it will create confusion, but it's a lie. And the media just never can call a lie a lie. And I think that some of the language gets to be on the reporting is just way too wishy-washy. Here is another one. The White House described the tax break differently. No, they lied about it. It's like how they couched this. And again, this explains how that they never had the opportunity to do this anyways, because of the lawmakers drafting the bill did not repeal all taxation of Social Security benefits. It has to do with Senate procedural quirks. If they were going to go through the normal process, they're subject to a filibuster. So the rules bar directly cutting Social Security. So they had no way of doing that from the beginning. And so now they've done it in a roundabout way, and they're basically lying about it. So that's one rant. Did I say I have opinions? I have another one on that's happening right now, and then I'll shut up and open it to questions. But there's another outrage, and Robert, I love how you opened this whole session. Focus on what you can control, do what's in your best interest, take care of yourself, be aware of what's going on. I think speak up, but don't let any of this bring you down. Live your life, live a good life. But here is another outrage, and I kind of knew that we would always be dealing with regular outrages. And this bothers me in the financial services industry. Trump's pardons have shortchanged fraud victims of millions of dollars in restitution. This is from ABC News. In April, fresh off a presidential pardon that sprung him from prison, convicted fraudster Jason Galanis embarked on a new and audacious legal fight, an attempt to recover money that he had already paid back his victims. Talk about chutzpah. As part of his 2017 sentence, a federal judge ordered Galanis to pay more than $80 million in restitution for his various fraudulent schemes. But when President Donald Trump commuted his 189-month prison sentence in March as part of a flurry of pardons. Galanis pardon warrant stipulated that no further fines and restitution should be collected. So days later, he asked a federal judge to order the government to return some $2 million he had already paid, arguing that because the government had not yet released those funds to his victims, that he was entitled to them. And so this is true that these pardons wipe out large financial obligations. And so people who are standing in line to be not necessarily made whole, but to get some compensation are end up losing out on getting this restitution. And I just want to point out, I think it is absolutely wrong. It's you hear about these Ponzi schemes and all the fraud that goes on, and then you hope you get justice. Somebody's finally arrested. There may be money to recover, and here somebody, for not good reason, gets pardoned, and then this is part of it, that the restitution can disappear. Um, at any rate, fight the good fight. Now, the one last thing about the big beautiful bill I want to mention that is somewhat concerning is the cuts in food stamps or SNAP, and then the Medicaid cuts. We are already getting hospitals announcing closures, one in Nebraska. And a lot of these rural hospitals, the figures are staggering. There is such a discrepancy between very expensive areas like South Florida, where we are, or much of California and Manhattan, and of these other poorer areas. And they rely heavily on Medicaid, and particularly Kentucky. The governor of Kentucky, Andy Beshear, who's a Democrat, he's saying almost half of the kids there are covered under Medicaid, and 35 hospitals may close. This remains to be seen. One of the things that the bill did was to give extra money for Medicaid for rural hospitals, but it's a drop in the bucket compared to the cuts. I mean, so we'll see where this goes over the next couple of years. All right, so on that, I'm going to shut up. And if there are, any, comments or questions, there are questions on how the actual deduction works against taxes. And it's an exemption for somebody over 65. So even a married couple, if one is over 65, it's only for the one who is over 65. So it would be 6,000. So it will wipe out a lot of taxes. I can't say exactly on how it's going to work, like what line it is. But it is true. This will be hugely beneficial to people who are over 65. I don't mean to minimize that at all. I just don't like how they're falsely, saying it gets rid of taxes on Social Security, which is a totally different issue. But this will absolutely help people who are over 65. And, one issue I have with it is it's hard enough for younger people with student loans, the cost of housing, and then this is definitely a tax break for older people. And when it shortens the longevity of the whole Social Security and Medicare system, what happens in 8 years? One comment I have made is that the way the law works is if there is a pay-as-you-go system, people say it's a Ponzi scheme, which is not correct. It is a pay-as-you-go system. So we will have funding for approximately 80% of the benefits. At that point, the benefits are supposed to be cut across the board so that the benefits are 80%, roughly 80%. It could be 78%. I cannot imagine politically that happening. What I think is going to happen is they're going to do some solution so that the people who are receiving checks get 100%. But it's basically stealing from future generations, because then they are the ones who are going to be funding that. And it's simply a matter of politics. To cut people's checks is probably going to create such outrage that they're going to create some system that, okay, we're going to keep you whole, but then the people who come to make it actuarially viable are going to be, the ones who are going to pay the price for that. So let me see here. The question that I'm already taking taxes for Social Security. Should I leave that alone? My answer is yes. The issue there is, I think that this is that it may be that you get a refund for 2 years. You could try to stop it and then reinstitute it. I think you're playing games here. I would rather have people not worry about getting a big tax bill. So I would leave that alone. And one of the things that's changed, and we're encouraging people to plan for taxes. If you get a pension, it's taxable. Some people don't know that. Social Security, up 85% of it is taxable depending on your income. And so you can withhold taxes. There's a form, and we provide that form. And now it's easier. You can choose the percent, 7%, 9%, 12%. There's like 4 different choices. And so you check a box, and that's the amount that's withheld, and you send that to your local Social Security office. It used to be more complicated, like exemptions and what's your forecasted income. So I encourage people to withhold. If you're just getting started, you may want to withhold less. Also, there's a comment here that it's not the 6,000 per senior is only if you're below a certain income amounts. That is absolutely true. And so that's another example of somebody who is just not paying attention or believing the propaganda, who is a high earner, thinking, oh, well, one benefit I'm going to get next year is I won't pay taxes on Social Security. Yes, you will. And you won't even get this $6,000 or $12,000 exemption. So it doesn't affect you at all. So this idea is like, oh, wow, I got my no taxes on Social Security. Completely false. So that's where you have to always do your homework and get second opinions and consider the source of the information. But it's a shame when it's from, as I say, the horse's mouth, from the government itself. That is a shame that we're getting false information from the government. And I hope that some of the abuses that we've had, like pardoning fraudsters, gets corrected in the future. We just need to be aware of it and speak up about it, and not let it go. So, okay, it's been half an hour, and then I will wrap it up. One thing on the book that I did on Take Pride in Your Money, this is a series that we're doing called Fast Financial 101. And I'm working on how to buy long-term care insurance, because that's a big one. That market has failed in so many ways, but there are good alternatives. I'm doing another one on Social Security, about how the whole system works. And now, again, that's very timely. One on Medicare, one on solo aging, and one of the earlier ones I want to get done is what happens when somebody passes away, because that's another big issue for people to deal with. And so there'll be more coming. and I wanted to do one. I think I can say this. The first one that I wrote was how to choose a financial advisor. And I make a lot of strong comments about our industry, how it's regulated, how things work, and everything that we do has to be approved by Cetera Advisors, our broker dealer. So word by word, and including the book that I've just published, Take Pride in Your Money, that's all approved. So on this one, there were like so many where they's like, well, don't say it so strong, disparaging remarks, try to say it this way. And it was like, don't even do this. So that's kind of where we are right now. And on that, feel free to reach out to us if you have any questions or anything we can help with. I hope this has been helpful, the timing of it. There's still a lot of uncertainty in the economy and the markets going forward. But we'll do another Treece talk, and I'll share my opinions. Bye, everyone. Thanks for joining.